Let's talk about the types of income and loss. We kind of talked about passive income earlier, and now we're just going to classify these. You could have a question that asks you to classify, hey, you got a list of, let's say, 10 different items, and it might say, what is the amount of active income this person has? What's the passive income, and what's the portfolio income? Now, you might say that, okay, passive income and portfolio income sound pretty similar, but to which I'd say just memorize the types of income that fall into the categories. These are the income sources, the income categories that the IRS has created, and just know them. So for sure. All right. So under your passive activity loss rules, income and loss items are sorted into three categories or baskets. We've got active income, passive, and portfolio. These are important because they all have different tax implications, as you could have guessed. These categories help to determine the tax treatment of income and losses, and they're essential for understanding how different income sources are going to affect a taxpayer's tax liability. Now, active income, this is probably something you're much more familiar with. Most people are going to have a job, just normal W-2 job. Active income is earned through active participation of the taxpayer in a business or activity. Additionally, it's generally subject to regular income tax rates and self-employment taxes if it's a self-employed activity. This is going to include salaries and wages. So you work for your accounting firm or a company, something like that. That's salaries and wages. Guaranteed payments for services. This is if a partner performs services for their own partnership, and it's kind of essentially just a salary, but for a partner who's kind of an owner there. So different classification. We'll deal with that more in partnerships. Business income or loss from activities in which the taxpayer actively participates. And like I did promise, we will see a slide later on how do you determine if they're an active participant. It's going to determine on how much activity you put into it, how many days of the year do you put into it. We'll talk about that. And lastly here, other taxable income that does not fall into one of the other two baskets. So yeah, if it doesn't fall into these two, it is considered active. Now, passive income, this is earned from activities in which the taxpayer does not materially participate. So again, important to determine if we are a material participant. Under the passive activity loss rules, which we kind of saw earlier, passive losses can only be used to offset passive income. Again, memorize that sentence for sure. That's super important. Any unused passive losses are going to be carried forward to future years. Now, this is going to include business income or a loss from activities in which you do not materially participate. This, we'll see a lot of examples, but if you got a 1% interest in a partnership, that's going to most likely, and let's say you just sit there and you just collect income from the partnership, all you did was contribute capital. That is a great example there. Rental real estate, which is automatically considered a passive activity unless there's an exception. So if I own a rental property and I collect rental income from it, generally that's going to be a passive activity. But if I'm a real estate professional and that's what I do as a main job, that would be possibly active income. We'll talk about that as well later. And then income or loss from a limited partnership interest, which is automatically considered passive. Here we go. We'll see, again, a lot of these examples in more depth because I love diving through examples, making sure we see the intricacies of everything. Now we've got portfolio income. This is going to consist of investment income that's not derived from the active participation in a trade or business. This is, just to skip down here, interest, dividends, annuities, royalties, capital gains and losses, generally things where you're just sitting around collecting them. These are subject to different tax rates depending on the type of income. We've got qualified dividends, long-term versus short-term capital gains. We've got lower rates than ordinary income. So that's a whole another criteria. Whole another section there of buckets, baskets, whatever you want to call them. Make sure you're familiar with this. This is going to be critically important throughout the exam. It's also, you can see questions on this specifically, but also this is kind of what you'd say a building block for a lot of what is to come in other lessons in the future. Let's see an example. Types of income. We've got a question prompt. The taxpayer is employed full-time as a teacher, and they have the following income items. They've got self-employment income. They got a little side business. Maybe they're a tutor on the side, right? They're making $40,000 from that side business. They've got rental income of $12,000, so they own a property. Good for you. Interest income of $3,000. Got some bonds that they are collecting interest on. Long-term capital gains and short-term capital loss. Some stock trading there. And what would our passive income be? Well, the passive income is just going to be that rental income. Because what are these other things? Well, this is going to be active. This $40,000, that's going to be side business. You're not going to, presumably, you're actively participating in that. The $12,000, that falls into our category we saw on the previous slide. And then these other things, the interest income and our capital gains, that all falls into portfolio. So yeah, in this case, $12,000 is automatically considered passive income, unless you've got the exception of the mom and pop exception or real estate professional, which we will see. And you're like, what is that? Of course, I'm not going to leave you hanging. We will see what those are. This is going to be active income as the taxpayer is actively involved in side business. Now you might be saying, oh, they're employed as full-time as a teacher. Where is their wages as being a teacher? It doesn't say anything about that, so we wouldn't include it. But if it said their W-2 wages from being a teacher is $60,000, then they have self-employment income from a side business of 40. So then in that case, that would be the active income. But the question is asking about passive income. In this case, it is going to be $12,000.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.